Alright traders, welcome back to today's learning section. In today's learning section, we are going to be talking about a very easy trading strategy that you can use to start making massive profits from the market. Okay, now this strategy is easy and is beginner friendly. So we're going to be talking about the CPR reversal strategy. Okay, the CPR reversal strategy. The CPR reversal strategy means the closing price reversal strategy. Okay, there are two things you have to take into consideration in order to achieve a perfect result from the strategy, and one of that is to check for a candle that tried to make a new high or a new low but failed. Okay, you check for a candle that tried to make a new high or a new low and then it failed and got pushed back down. Okay, let me show you what I mean by that. Okay, now let's look at this place. Let me zoom in. Let's look at this place. Okay, right here, this bearish candle over here is a candle that tries to make a new high. Can you see that? The high is higher than the previous candle. Okay, the high is higher than the previous candle, so it tried to make a new high, but then it got rejected and it came crashing down. So that is one of the factors you have to consider while using this strategy. And the next factor to consider is to check the point at which price closed on that candlesticks. Okay, so being that this is a bearish candlestick, so the closing should be below, right? This is the closing and this is the closing of the bullish candlestick. Okay, so the closing price should be lower than the closing price of the previous candlestick. Okay, I don't know if you understand. Just like I pointed out, this is the closing price for the bearish candlestick. It should be lower, okay, than the closing price of the previous candlestick. Okay, can you see that? With the arrow I have used to indicate it, you can see that the closing price is lower than the closing price of the bullish candlestick. Okay, so these are the two factors you should put into consideration. The first is to identify a candlestick, either a bearish candlestick or a bullish candlestick, that tried to make a new high or a new low but got rejected. Okay, but it failed to make a new high or a new low, and then the price came crashing down if it's a bearish candlestick, and the closing price should be lower than the previous candle closing price. Now let's look at a bullish example. Okay, so over here we have a bullish example of the conditions we need to be met. Let me zoom in. Okay, so right here you can see the bullish candlestick tried to make what? A new low. Can you see that? But it failed. Okay, you can see the low is lower than the previous bearish candle. So it tried to make a new low, but it failed. And then price trended up. Okay, the price trended up and the closing price should be what? Higher than the closing price of the previous candlestick. This is the previous candlestick. This is the previous candlestick. Okay, you can see that is the closing price. Since it's a bearish candlestick, the closing price is below. Why? If it's a bullish candlestick, the closing price is high, is at the top. Okay, so you can see that. So these conditions are the conditions we need to be met before we can look out for an entry position. Now I want to show you other instances where these conditions were met. Okay, so over here we have another example. Can you see that? The candlestick, the bearish candlestick, tried to make what? A new high. Can you see that? It tried to make a new high. The high is higher than the previous candlestick, but then it failed and you can see rejection. One week you see over there is rejection, and then price came crashing down and the closing price is lower than the closing price of the previous bullish candlestick. Okay, so when this happens, we say a reversal is about to occur. Okay, we know that a reversal is about to occur, and then we get ready to get an entry. So you can see that each time this condition were met, you notice a reversal, right? It was previously a bullish trend and you can see that it came what? Crashing down. It reversed and started what? Trending down. Now let me show you another instance. Okay, so right over here you can see the condition was also met here and it was previously bearish, and when that occurred, it reversed and started what? Trending up. The price became bullish. Now, if you can get an entry as soon as these conditions were met, then you're going to make massive profit from the market. Okay, so let's check out other conditions. So over here is another condition being met. There you can see it right there, right? So you can see it's the conditions were met there, and it was previously what bearish, and then it reversed and started what trending up. So guys, this strategy works for all assets. You can use it for your cryptocurrency, for your forex currency pairs, and for your synthetic indices. Now let's check out, this is volatility 100. Let's check out if the strategy actually works in boom and crash. Stay with me because I'm going to show you the exact point you are going to get your entry. So let's head over to boom and crash. Let's go to boom. Let's go to boom 500. Let's go to boom 500. Okay, so we are here in boom. So let's look at when these conditions were met on boom and see what happened. Right here we have one of the conditions being met over here. Okay, right here, let me zoom in. Okay, so right here you can see that the bullish candlestick over here, can you see that it tried to make a new low lower than the low of the previous candle, but then it's failed because you can see rejection. Okay, appearance of the week. The price came closing higher than the closing price of the previous bearish candlestick, and what happened thereafter was what? A spike up. Can you see that? It was a spike up. So you can see that this strategy also works for boom and crash. Let's check out the currency pairs. So this is euro gbp, and let's see when those conditions were met and what happened. Okay, right here we have the condition being met over here. When you look closely, you can see that the bearish candlestick right there tried to make what? A new high. Let me zoom in. So when you see the bearish candlestick tried what? To make a new high. Can you see that? It tried to make a new high, but then it got rejection, it failed, and price came crashing down. Can you see that? And the closing price was what? Lower than the closing price of the previous candlestick. Can you see that? The closing price was lower than the closing price of the bullish candlestick. And what happened thereafter was price was crashing down with a bearish trend, a change from bullish to what? To bearish. Can you see that? So this strategy works for all assets. Now let's talk about the point at which you should get an entry. Okay, now as soon as you notice that the conditions were met, okay, that is price failed to make a new high, and then price closed below the closing price of the previous candlestick, the next thing you have to do is to get an entry at the start of the next candlestick. Okay, so where you have to get an entry is right over here when the next candlestick start forming. Okay, the start of the next candlestick. So when you get your entry there, you put your SL just a little above the high of on the previous candlestick, and then you write massive profit down. Now if you check other conditions, you can see that this resulted in massive profit. Now let's go back to volatility 100 and check that out. So when I go through my chart, you can see that this strategy is something you can use to make profits easily. Now look at the condition met over here again. Okay, what do you do next is to what? Open up a trade at the opening price of the next candlestick, and then you write massive profits up there. Can you see that? Now when I go through the chart, see that these conditions were somewhere you can get a sharp entry and make massive profits down. Now if you get your entry right here, you are going to write massive profit down. Can you see that? Now let me go more, let me show you more. Can you see that the condition was also met right here? Okay, what do you do next is to enter your trade at the opening of the next candlestick, and then put your SL just above the wick of the bearish candlestick that failed to make a new high, and you ride massive profits down. So if you go over the chart, just check it, back test it, you can see that this keep happening over and over again. Here we have it over here again. Can you see that? When the conditions were met, open up your trade at the beginning of the next candlestick, and then you write massive profit down there. Now stay with me, I'm going to show you how you can use this strategy to scalp the markets in a trending market. Okay, you can scalp a lot of profits in the trending market. Now let me show you that. Okay, so let's say you have a trending market right over here like this on your chart. Say you came and you draw your trend line. Okay, the first thing to do, draw your trend line. Now what you have to do is watch out for the point at which these conditions were met, and it should be in line with the major trend. Okay, the trend is a bullish trend, right? It's a bullish trend. So all we have to do is look out for the point at which price tried to make a new low, but then it failed and price closed what? Higher than the closing price of the previous candlestick. And we can find that over here. Let me zoom in. Let me zoom in. Now, can you see this right here? Can you see that? Can you see the occurrence right here? Price tried to make a new low. Can you see that? But then price closed higher than the low, higher than the closing price of the previous bearish candlestick. And you open up a trade. You open up a trade right here at the opening of the next candlestick, and you write massive profit down, and you can keep doing this until the trend changes completely. Now let's look at the next touch. Can you see that? Another occurrence over here, still on the trend line direction. Can you see that? Price tried to failed to make a new low. The closing price is higher than the closing price of the previous candlestick. Then you open up your trade. Okay, take a trade, and then you write massive profit up there. So this is how to use this to trade your trending market. Okay, so if you got value from this lesson, I want you to hit the subscribe button, like this video, and turn on notification bell so you'll be notified when we post many more great strategies. Go on to your channel and test it and tell me what you think about this strategy. Thank you for watching. Bye.